Hey everyone, what's going on? Welcome to the Reality of Real Estate podcast. I am one of your hosts, Christopher Lynch, and welcome my co-host.
Hey everybody, my name is Brianna Lehman.
We give you a real take on making homeownership attainable.
We will be breaking down real-life scenarios, trends in the current market, and giving you our personal tools to make homeownership not just your dream, but your reality.
Get ready to be inspired, motivated, and ready to take action towards building your own empire.
Because when you invest in real estate, you aren't just purchasing a home, you're investing in your future.
Hey, what's happening?
Not much. How are you?
Good, how are you?
Good.
I just think that it's funny that I don't know if we've wasted, we made a good investment into, our relationship here with Lucas for
An hour.
Yeah.
An hour. We've just been chatting about life. Love is blind.
Yeah. Haley and I stayed up until like 12:30 to watch.
When you watch it, do you also get on Twitter and read everybody's responses? Because that is my favorite part of it.
Well, so normally I don't, but I had to because I needed to know more about, did you hear that apparently some girl said that Jimmy was
her boyfriend? I saw that on Twitter, and then I went down a rabbit hole, and I was like, what is going on? It's so good.
And then I found this really funny black girl who broke it down, and she was like, that girl's a liar, but she didn't call her a girl. She had other, explicit language. Mm-hmm. And when she found every receipt she possibly could.
So it wasn't true?
No, it's not true. And she was like, on December 28th of 2023.
Why is she claiming him?
I know. Did you know that they said he looked like that thumb man?
Well, I said he looked like a toad. This is rude. All right, we can't talk about this anymore because this is why I get on Twitter, because I'm like, do people feel the same way I do, or am I mean? So, okay.
Oh, that's funny. But, okay. So, yeah, we stayed up until after 12:30 watching that. And we couldn't catch Lucas up because he is not watching this season.
Mm-hmm. This is like my guilty pleasure, is like trash reality.
I call it smut.
It is smut. It is. It's awful. Okay, so moving on from that.
Yeah, you don't care about our smut.
No. How are things in the lending world for you right now?
They're okay. I mean, that just kind of helps us talk about what we want to talk about today, are just not ready to commit. Mm-hmm. They are holding on for lower rates, which I can understand, but I also would say for the amount of people who purchased homes last year at higher rates than what they are right now, like those people are fine and they don't regret their decision. They're looking forward to the opportunity to do a refinance. And I'm not saying that everyone's life is the same, but in reality, everyone's life to some extent is similar, especially in like our area, to where you can still buy a house. But as of right now, since it has, like the feds have released and said that they are intending on doing rate cuts this year, and since they came out and said it, I feel like that's what people are waiting on from either a buyer perspective and a seller perspective.
But they've said that before and then didn't.
Correct. But historically, it is an election year. And so they'll do something. How drastic it'll be, who knows?
Well, and I think I know from clients that I'm talking to, the unknown. Yeah. I think a lot of buyers, and I'm not even being funny, have PTSD from 2020, the last election year. That year shook our whole lives up. It changed everything.
That we do.
So now you're like, what's going to happen this year? And there is some unknown with it. I think, too, that my buyers are more reluctant because there's not a lot of inventory.
True.
What I hear a lot is, well, we want to wait until the spring. Like, there'll be more listings in the spring, right? Typically, yes, that's the trend that we see, but then we also see a lot more competition. Mm-hmm. So.
But I mean, like, I don't know how many transactions that we did together last year, but the majority of our people felt the same way, is that inventory was low. They didn't know if, like, this all made sense for them.
Right.
But it did make sense.
It did.
They're all happy, and they love their homes. And, like, that's just where if you don't give yourself a shot, like, you're not going to know.
Right. And I will say, like, a little success story from the last time that we met up where we were waiting to hear if I wanted multiple offers. We did. And I had this exact conversation with those buyers. Their situation was a little different because they had a time frame. Like, their lease was up and they could do month to month, but they're like, we would prefer to be out by the time our lease is up, you know?
That makes
They were
sense.
ready to buy. They didn't want to pay the asking price of the home. But then when they realized we're in multiple offers, I broke down their situation for them. Again, like, listen, this is what you told me. So if what you told me is true and you love this house and this is where you want to be, these are the things that we have to do to get there. And for them, they were able to pay their own closing costs. They were able to go up a little bit and do those things, but they won. And we weren't anything crazy over. We were over a couple $1,000s. Like, I don't want to give too much because it's still in the transaction, but it wasn't like we had to offer 20,000 over because
Correct.
there is this misconception, I think, still with buyers that if you're in multiple offers, we got to give everything we've ever made up. And that's not true either. So,
and sometimes it boils down to the conversation, because if you are in a multiple offer situation, it is very helpful to have the rapport with your agent, but you also, as the agent, to have that with your client, to go back to them and just say, hey, this is where we're at. This is what you said that you wanted.
mm-hmm.
And when we get down to the nitty gritty, does it make sense to throw in an escalation clause? Does
Right.
it make sense to do this or do that? And like, have you had a conversation with your lender? Can we do a little bit of a quicker close? Like, are you secure in the numbers that the lender has given you, or do you need to like explore what things look like if we go up to X number? Because security in a transaction, like it means a lot. So like, you need to make sure that all parties are secure in whatever decision is being made. And so when you are approaching something like this, you have to have that real conversation, because if you are in a situation and just like, I shouldn't say I don't know, but I do know what this house was listed at. But if they would have lost it by $500, $1,000,
Right,
would you have been
exactly.
upset?
Right.
And I just had a similar conversation with a client yesterday who they are the fifth offer on a house. And the husband did not want to go up to where I had suggested or where his agent had suggested, but the wife did. And so I just had to ask him, and I said, are you going to be upset if you lose this house over $1,000? And he said, yeah. And then we rediscussed numbers, and then he was just like, you know what? No, I'm not. It's a smaller home. It's not exactly what we said that we were looking for, but we do love it. I don't love it to where
They're willing to do that.
Yeah. And so it's just like, cool, that makes sense. That's all I care about.
Right.
And at the end of the day, it's not my house and it's not my money. So if you don't care, I don't care.
Right. And what are the other terms of the contract too? We've talked about this before. Price might not always be the winner. Of course, it is the first thing people look at, but there's so many other different terms in a contract. I always call the agent and just say, I know there's only so much that you're going to tell me or you're able to tell me, especially when we're in other offers. But in this situation, I said, can you tell me, are we even in the ballpark? Are we even in the top? Because if not, I need to have that conversation with them, or what's the point of, not what's the point, but to them, like, if you're not even close, are you even willing to go there?
Yeah.
Like you said, like, if you're not, then okay. But talking to the agent, what do the sellers need for closing possession? Inspections, I haven't had a buyer have to waive inspections fully in a long time, which is good.
Yeah, it is. Because like,
You
do. Because you don't want to have yourself in a situation to where you regret the house that you've purchased because you waived an inspection. And unfortunately, an appraiser's job is to be able to go in and make sure that the collateral is sufficient and it actually is at market value in comparison to what it's being sold for. They're not going in to
do an inspection. No.
Like, those are two different things. And so if something doesn't get called on the appraisal, then you have a problem down the road. Do you regret it?
Right. And I have been at homes when the appraisal is happening and they take 10 to 15 minutes. A home inspection takes 2 to 3 hours. So they are two very different things with two very different purposes, and they are not the same. They are not. Which we talked about last week, like the difference in them are. But yeah, I also think too, so I looked up stats this morning. You and I had talked, and I was just looking in the MLS for Stark County stats only, and they aren't fully updated yet. Like January of 24 wasn't on a lot of the stats, but what it was on is list rate to close rate for pricing. And it was actually below, like it was trending. So it went back to 2019, and you could see in 2020 it spiked up that the list price was less than the close price. But I think that the average sale price was like $199.9, or I'm sorry, list price was $199.9 in January of 2024 this year. And the average sale price was $180 something. So buyers who are buying right now have been able to negotiate, get a better deal, maybe get more seller concessions to buy down their rate, things that we have talked about.
Yes.
But even having those conversations, some buyers are still pretty reluctant right now.
Yeah, because it's like, because I know that you will know what I'm talking about, but I did ask the client if I could tell you what the house ended up appraising for. There's a specific home that you sent me and asked me to run numbers for. And
for myself, right? Yes. Okay.
And guess what it appraised for?
I don't know. 220?
223.5.
Wow. And it was listed way
under that.
Because that house was just cosmetically unappealing. It was just.
And you didn't like the location of it.
Fair. And that's fair. I'm never going to doubt my buyers if they're like, hate the location.
Yeah. So no, that doesn't matter. Because it worked out.
Hey, I side with my buyers with that. If they're like, this is where I want to be, I'm like, I get it, because I'm the same.
No, I told you that. I always ask that question just because like location is important, whether it's school district or whatever, but where this house is located, to me, I wouldn't know any different because I ain't going there. I mean, so.
Chris.
No.
Well, people are going to know where it is because that's where I'm looking. But sometimes I don't want to go there either, but that's neither here nor there. Yeah, that's crazy.
Yeah, but I had
that's
asked her.
$30,000 more than where it was listed.
Yes.
Right?
And yeah, that's all I can say.
Yeah. So they have instant equity.
Yeah, and I mean, I was shocked.
Yeah, I'm shocked right now thinking about it. It's crazy.
But there's other properties that it's either the appraised value is coming in at the amount.
Yeah, I've seen that a lot.
It is coming in over. So, which then rolls into, if you buy a house right now, how quickly can you refi? That really just depends on who the lender is. I can say for me, on average, we're looking anywhere between 95 to 100 days post-closing.
Okay.
So, which means that you would be making at least your first 4 mortgage payments in reality, to where by the time like the refi would actually close, you would have made at least 4 full payments. So if you buy something now, and especially if it appraises for more, it just puts you in a better equity position, loan to value wise.
So if somebody uses a different lender, let's run this scenario, and then they close and they immediately want to refinance, they can't. They have to wait a few months.
Because I know what you're asking.
This is a genuine question, and I just want to know.
I always say to ask these questions.
Yeah.
Is that you do want to know if there is a prepayment penalty to you, but also to that lender.
Okay.
Because sometimes there's not a prepayment penalty to the buyer, but there is a prepayment penalty to the lender.
So people who don't know what that means, like,
that means that if you pay off your loan before, for me, if you tell me up front, I'll just be honest because I have the same conversation with my clients. If you said, hey, I'm going to buy a house today, and whether If rates drop to X number in 2 weeks, I'm going to refi. I'll tell you right off the gate, like from the gates, that I'm not your loan officer. I will not do a loan for you. You will not be penalized, but I will. And so I'm not going to put my business in jeopardy to just say that I'm going to do a loan for you. Because at the end of the day, why are we doing the loan at all? If in reality, like, none of us have a crystal ball. None of us are Jesus to know exactly when you will be allowed to do this refinance, like counting on a rate. But those are the important questions to have up front to just say, hey, like, what does this look like? Previous company I worked at, you had to at least make your first 6 months worth of mortgage payments. So technically
that's pretty standard, right?
Yeah, it's anywhere between 6 months to a year. And for most companies. So, but banks, residential mortgage lenders, they're not doing a loan today at this amount just for you to be able to turn back around and do a refinance immediately, costing someone some money.
Right.
And so for me, I'm not going to put my personal business, my branch's business in jeopardy just to say that I was able to close a loan in February. Doesn't make any sense. So,
because is the penalty pretty hefty then?
Oh yeah. Like it is, to where like I've seen it before, to where like it can crush a business depending on, because it's called an EPO, early payoff, on like my side. And depending on who the investor is and what all that looks like, it jeopardizes someone's livelihood and everything that they have worked for to get where they are.
Wow, this is intense.
Yeah.
I didn't realize it was.
Yeah.
I mean, obviously I know what this is and I've dealt with it, but I didn't realize it was that hefty. So that buyer should wait
or just ask the questions.
Yeah.
Like, just ask, because like if you did a loan through like a local credit union, they might have a prepayment penalty, which is usually just going to be a percentage of whatever you borrowed, compared to, it's not going to be an EPO or like deficit to them, because they're going to make up for it by charging you that prepayment penalty. Compared to if you call like whoever you do your day-to-day banking with, theirs might be a little similar to mine.
Where it's a bigger penalty.
And so is
it the same if somebody does a loan with you and then they immediately turn around and pay it off in cash?
Yes.
Okay.
I'll tell you the same thing.
Because it's like recast is a loan where they can buy before they sell and then take the money that they made from their sale of their home and apply it right to the principal. So if it's an amount that could pay it off, you could be penalized. If they pay it down. There's still
a timeline for that, and it's going to follow your refi timeline.
Got it.
Because how a bank is going to look at it is, why are we doing a loan structured this way for you today, knowing that this is what your intentions are? At that point, then you would just need to consider doing a bridge loan.
Yeah. Does Cross Country offer bridge loans?
Yes, we do. But we only can do a bridge loan if we are going to do the loan on the new home. And so if we're not going to do the loan on the new home, we can't just do a bridge loan.
Right. Of course. That would just make no sense then.
Correct.
But, okay. That's interesting.
So, yeah. But that's just where, like...
I'm always learning things on this podcast.
Like, the conversations are just so important, because everyone's situation is somewhat similar, but they're also very different, to where, like, just because, like, your situation... I might say, hey, you can do X, Y, and Z, but you're just like, hey, I'm not comfortable with that.
Yeah. And I can empathize with my clients a lot, because I'm sitting in the same shoes as most of them, where it's like, I get it. Why would I want to pay
X amount of dollars when you are paying X for where you currently live?
Well, and for something that's not exactly what I want.
Exactly.
Like, if there was something that came up today that was where I want it, what I want, I would call you. And don't roll your eyes, because I would. But that hasn't happened. Not one time.
Yeah, just like that one property that I sent you, and I said, you could make this exactly what you want it to be. And it's like, I took somebody through that house and blah, 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 blah.
I did. And here's the other thing about being in the business is, if I do take a client through a house and like listen to all the things, and I'm like, yeah, you're right. I don't like it either. Like it's very easy for me to be like, yeah, I see what you're saying. I don't like it either. It's not for me. I went through one this weekend in this place with a client, and I was like, wow, I could actually make this really nice. But then I looked at the disclosures with them, and as we were going through it, I was like, yeah, neither of us like this.
See? Yeah. Like, I don't know. I'm a big believer that your house always finds you.
Mm-hmm. And it lines up and the timing's right. And I just said that to somebody over the weekend because this is a mutual client of ours where we were talking about like the different scenarios that they're dealing with right now. And I was like, I truly believe it will work out exactly how it's supposed to work out. It will be easy. It will feel right. There won't be anxiety. The only people that I feel like can have anxiety in their deals are investors. You are fighting for yes, my investors, I love them, but they're a different breed.
They are
a different breed of people. They are fighting to the death over $1,000. Those are always the most intense deals for me.
Okay, no, I'm going to disagree with you because sorry, investors out there. I understand where you're at, what you're doing, all that fun stuff. But someone who is looking to make an additional source of income compared to the person who is trying to structure this out to make sure that they can still keep their current lifestyle and do all these things on their normal day-to-day, that to me is real anxiety, real pressure, because if you're paying daycare and you're paying these high groceries, I almost swore on this show.
I know. Oh my gosh. No, I don't mean like that. Like our buyers, they're making a lifestyle change. Like this is a change of everything that they do. So yeah, there is going to be anxiety, but I'm saying like when it's right, buyers are calmer, they're understanding, they're willing to do things.
Correct.
Investors are never willing to do that. I feel like investors are always like, Brianna, I'm not paying it. Like, no, $1,000, the deal is dead. And I'm like, what is going on?
To me, I feel like when an investor is involved, the other parties in the transaction, they have the anxiety because of a never fails. It's like, well, why am I paying this fee? Why is my appraisal more? Well, because the appraiser has to do extra work to be able to tell us about the market rate rent, and they have to,
yeah, it's definitely a different process.
Yeah,
for
and
sure.
so like those sorts of things are going to be different, and especially like in our current market, I always tell any of my investor clients that they need to ask for seller concessions because like pricing on the interest rates are just not the same way as if this were going to be like the primary residence, and so then it's like they forget and have amnesia, and it's like, hey, you told me to ask for the 2% that I'm allowed to ask for in concessions, and now I'm in a situation to where what I see on paper is exactly what you told me, but I completely forgot about that, and why am I paying for this?
See, I feel like just like the investors that I have are buying other investors' portfolios.
Yes.
So that's also different because if they're buying from an actual like residential seller, that's somebody that lives there, we could probably get closing costs and stuff. But if I'm one investor to the next investor, there's not very much room. That's when it gets down to like the nitty gritty. I'm talking $250 sometimes where they're like, I'm not paying that.
Yeah, because it's like you eat how I eat.
Yep. And usually those portfolios are being sold so that they can invest in something else. And we're on a completely different topic than where we started. But
I mean, it's just another buyer.
Yeah, it is. And I appreciate them. Like I love a good investor to throw in there with other deals because it is different and it is a little more like rugged and intense, but I definitely don't want a whole portfolio of investors.
Or like when you went to that property in Akron last week and you couldn't find your key. And what did I say before we hung up the phone?
I said, I'm just going to have to risk it. I was going to get out.
And I said, no, you will not. You will find your key. So did you find it?
I did, and locked my door and went in. I'm not even worried about my car. I'm worried about going into vacant houses by myself for a video chat with an investor.
Do you have a key that pops out?
No.
Oh, I don't either. So actually, no, I do. But it goes to my glove box only.
Oh, no, I don't have a key that pops out. I need something else.
Are you sure you don't have one?
Yeah. Yeah, my keys are over there. Well, look, I'm telling you, I don't.
I always tell agents.
It like I have to like pull it out. Like it doesn't pop open.
Oh, yeah. That's what I mean.
Oh yeah, like it will come out and like emergency start my car if I needed it to.
Oh, mine won't emergency start anything other than open and unlock and lock my glove box.
Weird. Oh, okay. Well, anyway.
Yeah, I was just going to say you could use it as a weapon.
Yeah, that's the thing too. Is investment properties are
like a brass knuckle.
Interesting sometimes, but
yeah. But no, I guess my message to buyers right now is sometimes the perfect situation is just not going to happen. And I can give you an example of a guy that I was talking to all last week, and then we decided to part ways on Friday because he is currently, this is in Columbus, and his rent right now is $13.55, and the house that he was going to buy, $165,000. It's in Franklin County, lower property taxes, and the mortgage, his down payment, cash to close just for him was going to be around like $6,500, and the mortgage payment, including everything, was at $1,316 and some change. And
so less than rent.
Less than rent.
Okay.
Seller was covering his closing cost. Only thing he had to do was essentially bring his down payment to the table. And he said no. Where I think the disconnect that I shouldn't say I think, I told him that I feel like the disconnect came into play because he previously purchased a home that wasn't far from this home, but he purchased it in 1989, the year I was born, for $33,000.
Yeah.
And so he got divorced, and his ex-wife got to keep the home. And it's like, she didn't buy him out of it, but I don't know what their divorce actually, all that nitty gritty actually broke down to, but she didn't buy him out of it. But to him, why would I pay $165,000 for a house that is less than 5 minutes away from the house that I've lived in for X amount of years and that I paid $33,000 for?
Well, and to me, that sounds like whoever the agent was in that area, there's education on the market and the trends, and this is appreciation, and this is...
Yeah, and so, but
that's a long time ago. No offense.
You trying to call me old or something?
No, I'm 2 years younger than you. So.
Well, don't be trying to say a long time ago.
It is a long time ago.
But no, like we did that, and just in his mind, how he calculated it, and like he's an older gentleman, and he was like, over a 30-year mortgage, this is going to be $400 and some odd thousand. Sure, but I was like, are you taking out escrow? That's not part of that. And then, but you also have to keep in mind that you would have the ability to refinance. And so what he said that he wanted was he wanted something to be able to leave behind for his children and his grandchildren. Well, now that's a different conversation. And so, yeah, if you buy the house today at this price, and depending on when you can do a refinance, sure. Yes, like you'd still be paying less than what you're paying in rent. But then when we looked at two different other scenarios on what the rate could go down to and changing the loan product, that was completely different. That changed the payment anywhere between $190 up to $300 lower. So he finally just said, like, you've done a great job. I feel like you've explained everything well. But for me, I don't see the value in paying $165,000 for a house when I bought the same house less than 5 minutes away for $33,000. And so I just said, okay, like I have to respect how you feel and how you're looking at this, and just called it a day. And he texted me afterwards and just said, I am really sorry. I feel like, like you've gone to bat for me and we put all these things together. But yeah, he can't get past on what he previously paid for a home.
And I understand that. We see that all the time where buyers are like, whoa, I know this area. This is crazy. And we're either going to wait for something that makes more sense to them to come up, or eventually they'll start to see the trend and realize, okay, this is only going to continue to appreciate or be even further than where I
Yep.
want to be. So I think our job is to meet people where they are. You know what I mean?
And that's where like I had to tell him that like, hey, like I respect your decision, but I also like, as you know, I'm not backing down from the opportunity. This is what you say that you want, and which is every conversation until Friday. He had told me that that's what he wanted.
Right.
So I'm not just going to throw in the towel with you and give up, but especially when we have a deal in our hands.
Right.
And
Yeah,
so,
we don't just give up. We fight till the death.
pretty
till
much.
the end.
Yeah, pretty
nobody's
much.
dying. I'm just joking. Nobody's dying. Okay, well.
Yes.
Did you want to touch on anything else as far as like payments or helping the buyers get ready,
No,
feel
I
more
mean,
comfortable?
if this is what you say that you are wanting to do right now, connect with us or whoever you've spoken to previously and have the conversation and just make sure that your goals, your wants, and your needs are technically being met. And so, like, if you say that this is where you want to be, where you want to go, and all those things, make sure that it's possible because maybe you can, especially if this was last year compared to now. Like, do you have the ability to where you have more buying power? Or if you've never had the conversation before with anyone other than your friends and family at your kitchen dinner table, then maybe you do want to have the conversation just because it is possible and it can happen for you.
And just start the conversation. Like, okay, maybe you're a year out. Time is going to pass anyway. So you might as well know now what you need to do to get there in a year. And time goes fast.
It
like,
sure does.
I mean, a year is not that long. Like I'm talking to buyers now that last year or even the end of 22, like we're not ready. It's going to be a while. Well, now we're here. And that happens really fast. So at least start the conversation and help us to help you and know what makes you comfortable and what's going to help you make the move.
Yeah. Don't hold back. And sometimes these conversations can feel a little invasive.
They are, yeah.
But don't hold back if you know that it's going to make or break a decision for you.
Yeah.
Because if you are withholding information, like if you're someone who doesn't grocery shop, you like to eat out every single day, or you like to go on 3 or 4 vacations every year, whatever that looks like.
Stop attacking me. Those are both my scenarios.
Shut up. Like, don't withhold that information because that is very important, and you don't want for them to project this idea and say like, hey, like this is actually really doable for you. And then you're just like, no, it's not, because now since she says that I'm attacking her, she can't call me about some family pick menu that she discovered last week and so that I can feed my whole family
we'll
for this.
We'll talk about that later because that was amazing.
Bye. I mean, maybe it tasted good. I don't know. Or that, like, you know, she just went to Disney and she's probably going to go on at least 2 other vacations this year.
One for sure. But
It'll be 2, but it's okay.
mental health.
There's nothing wrong with it.
Matters.
But that's what I mean. Just be realistic, but also share that with whoever you're going to work with.
Right.
Because if they don't know these things about you, they can't help you.
Right. And just see if you are willing to sacrifice something somewhere. And if you're not, you're not. And then what does that look like too, for sure.
But yeah, no, I like this one. So
we like everyone. We say that every time.
Well, I just feel like we're like what we're talking about and the fact that we don't have
and
notes
it's very
and
real
scripts.
And we didn't know what we were talking about until we hit roll. So
yeah, we didn't know where the conversation was going to go because I texted you yesterday and told you what we were going to talk about.
It changes every week, but it always changes. Anyway, all right.
Dude, why are you so petty? Like,
don't get me started. Okay. All right. Well, thank you, everyone, for joining us.
We appreciate you, and we will catch you next time.
All right. Bye. Toodles. You're petty. That was petty.
All right, friends, as we close things out today, remember homeownership is more than just a roof over your head. It's a symbol of your strength, resilience, and determination.
Take action, embrace growth, and never be discouraged about where you are in your journey.
And remember to follow us on Instagram at Reality of Real Estate Podcast.
Our emails are linked in the description below. You can reach us at
Christopher.lynch@ccm.com.
and my email is blaymanrealtor@gmail.com.
All right.
Toodles!